Russia is in economic freefall. Its manufacturing and services sectors are struggling. The nation's interest rates have reached record levels and show no sign of falling anytime soon. Recruitment is challenging, and major companies are cutting jobs at a massive rate. The cost of war in Ukraine is higher than Russian President Vladimir Putin could have ever anticipated, and he's sending his country down the economic toilet. And it'll get worse for Russia in the future, as you'll find out later in this video. But just how big are the economic problems facing Putin right now? Well, let's start with the country's Purchasing Managers Index, or PMI, data. On the surface, it looks like Russia's economy is due for some limited growth. That's according to Russia Matters, which says the World Bank predicts Russia's gross domestic product, or GDP, to grow by 1.6% in 2025, falling to 1.1% in 2026. The World Economic Outlook has slightly different figures. It says the country's GDP will grow by 1.4% this year, followed by 1.2% growth in 2026. These aren't particularly impressive figures, especially when compared to the full-year GDP growth of 4.1% Russia experienced in 2024. Still, growth is growth, right? A growing economy is always better than a contracting economy. The problem is that these growth figures, as meager as they may be, are still hiding the problems that are causing Russia's entire economic core to rot. The country's most recent PMI data showcases this problem. On March 3rd, the Moscow Times reported that Russia's sector PMI fell by almost 3 points, dropping from 53.1 in January to 50.2 in February. That's still indicative of expansion, as any number over 50 suggests that product and service output is growing. However, Russia is at the point where its PMI is just about holding its metaphorical head above water. S&P Global says that the result highlights the slowest PMI expansion in 5 months, with its report on the issue stating, the latest data signal only a slight improvement in the health of the goods producing sector, and one that was the slowest in the current 5-month sequence of growth. The words sequence of growth are key here. The previous 5 months have seen Russia's good-producing sectors experience a small bounce back. That's on its way to reversing. With Russia's PMI in free fall, it's only a matter of time before it finds itself in a position where its PMI shows contraction, indicating that demand for what Russia manufactures is slowly disappearing. The takeaway is simple: Russia's manufacturing momentum is way down. The Irish Star calls these figures an unmistakable indicator of an economy on shaky ground, while suggesting that Putin is considering drastic action to reverse the downward trend. Nobody knows what that drastic action might be, but it's clear that Russia's leader is panicking, and he should be. The PMI news is bad enough, but it still indicates marginal growth. Elsewhere in Russia, we're seeing plenty of signs that the country's economy is teetering on a cliff and that it already has one foot over the edge. Take Russia's base interest rate, for example. On February 14th, the Bank of Russia Board of Directors chose to maintain a base interest rate of 21% throughout the country. It gave several reasons. Inflationary pressures remain high, with inflation hitting a 2-year high in February. The Moscow Times reports that annual inflation jumped to 10.1% year-on-year in February, which was an increase over the 9.9% year-on-year figures from January. The net result is that everyday Russians are spending more than they have in 2 years on goods, while also dealing with massive cost of borrowing due to the country's high interest rates. The PMI fall now starts to make more sense. Combine a lack of international appetite for Russia's products with its inability to spend domestically, and you get a decline in the number of orders being placed for goods and services. Russia's central bank also suggests that there's a supply and demand issue in the country. Domestic demand growth is still outstripping the capabilities to expand the supply of goods and services, it says in its base rate announcement. That's a veiled way of saying that the massive demands placed on Russia by the Ukraine war are exhausting its manufacturing sector. Russia simply can't build enough to keep that war going, which has the knock-on effect of the country failing to meet domestic demand for goods and services. Still, the bank is trying to claim that there's hope for Russia's economic future. The bank says its forecast suggests that its tight monetary policy stance will result in annual deflation falling to between 7 and 8% by the end of 2025, returning to its target rate of 4% in 2026. That doesn't seem likely. Even if Russia and Ukraine negotiate peace terms, the economic fallout of the Ukraine war is going to hit Russia hard, as we'll explain later. Plus, inflation, being as high as it is right now, suggests that more interest rate hikes are going to come in 2025. That's according to the Carnegie Endowment, which said as much in December 2024. That's when Russia's inflation stood at 8.7%. It's 1.4% higher than that today. It also points out that the decision to hike rates to 21% back in October 2024 set Russia's third interest rate record in a decade. The first came in 2014 when Russia switched to a free-floating currency, forcing a hike up to 17%. Putin's decision to invade Ukraine saw rates jump up to 20% before declining to 16% at the beginning of 2024. However, the combination of growing inflation and the weakening of the ruble caused a turnaround, leading to the 21% base rate we see today. Don't underestimate the impact this sky-high interest rate is having on everyday Russians. Speaking to the Irish Star, Anastasia Ovacharenko of Contact Intersearch Russia points out that there are now tons of problems for businesses and their employees. Business is caught between a rock and a hard place, she says. On the one hand, high interest rates and expensive loans. On the other hand, this also affects the lives of employees. If previously they could get a mortgage at 10%, now they can only get one at 30%, and that means they will demand more money from their employers. That could be a problem. Why? Because another indicator that Russia's economy is in the toilet is that its businesses are currently struggling. Oleg Buklemyshev, who's a Russian economist and the director of the Economic Policy Research Center at Moscow State University, puts it bluntly. There is no longer enough of a profit margin to significantly increase workers' salaries. There will be no profit cushion to make this possible. And he's right. Between 2016 and 2020, Russian incomes stagnated to the point where they were between 7 and 8% below the levels seen in 2013. Growth resumed in 2021, but by that point, Russians had already experienced 4 years of wage declines. By the end of 2024, Russian incomes just about exceeded those seen in 2013. It didn't seem that way on the surface, as by 2024, the average Russian was being paid a nominal wage of 84,000 rubles, which is much higher than the 29,800 rubles average from 2013. However, this increase came at a time when the exchange rate was above 100 rubles per US dollar. So in real terms, the wage increases seen from 2013 to 2024 amounted to just $14 per month. And it's only going to get worse from here. If Russia is getting away with essentially overstating the realities of wage growth in the country, it's not going to be able to hide what's really going on for much longer. Jobs are disappearing as Russian companies try to cut back as much as possible so they can become profitable again. We see hints of this in Russian recruitment. In November 2024, Reuters reported that Russia's economy was struggling to find workers. Why? The country's defense sector, which is still one of the very few sectors seeing any sort of growth in Russia, was poaching all of the best workers. Combine that with the military's need to constantly bring recruits on board, and you get a situation where Russia is once again papering over cracks. So while unemployment dropped to record lows of 2.3% in November 2024, that figure was propped up by Russia's defense and military sectors. Reuters highlighted the example of Sverdlovsk. The region is home to many factories serving the defense sector, but there are also hundreds of other businesses that aren't related to the war and are facing severe recruitment crises. Reuters said the region, which is home to 40 million people, had 54,912 job vacancies in October 2024. The problem is that it only had 8,762 unemployed people, creating an imbalance of 9 jobs for every unemployed person. That's a Russia-wide problem. Recruitment company Superjob says that job vacancies across Russia increased 1.7 times over the 2 years between 2022 and 2024, rising to 2.5 times in its non-war related industrial sector. Even the Russian central bank has gotten in on the act. It says that 73% of Russia's businesses are short on staff. Le Monde Diplomatique puts the numbers in sharp focus. In February, it reported that Russia's military-industrial complex running at full steam had created a severe labor shortage estimated at 5 million people, which accounts for 6.8% of Russia's active population. There are several reasons for this. For one, as Reuters reported, Russia's defense industry is sucking up all of the viable recruits. Russia is also dealing with a drop in birth rates that has persisted since the 1990s, meaning there's a shortfall of young workers entering the job market. Combine those two issues with Oleg Buklemishev's statement that regular Russian businesses are quickly running out of money, and you get a powder keg that can only lead to one thing: the complete collapse of every Russian business sector that isn't being propped up by the Ukraine war. That's what Putin doesn't want the rest of the world to understand when he touts Russia's record low unemployment rates. Sure, minimal unemployment is often a good thing for a country's economy. It means average people have jobs and are getting paid, which gives them money to pump back into products and services. However, the businesses producing those products and services are struggling to keep their heads above water and can't find the people they need to grow. Plus, the average Russian having a job doesn't mean much when rampant inflation and record interest rates are limiting their ability to spend. There's a great irony in all of this. Russia's non-war businesses have struggled to find the right people for so long that they're now being forced to make severe cuts. They have to. They haven't been able to generate the profits they need because Russia's wartime demands have limited their access to talent that could help them grow. So even papering over the cracks isn't going to be possible for much longer. Putin is soon going to face a situation where some of his country's most talented workers find themselves out of jobs, and the odds are they'll struggle to find anything else that isn't military related because other companies that may have hired them are being forced to make cuts driven by their previous inability to find good talent. It's a devastating cycle, and it's going to hit Russia hard very soon. VisiV Consult managing partner Olga Petrova highlights the scale of the problem. Several companies are discussing behind closed doors about reducing up to 40 to 50% of contracted staff, including IT specialists, she says. Anastasia Overcharenko echoes that viewpoint. It's likely that IT specialists working on investment projects with uncertain prospects will be let go. These projects will be closed and their resources redistributed, but there won't be a big story where all tech staff are fired. Of course there won't. Putin will never allow such a story to make the rounds in Russia. However, he can't hide from the fact that his drive to employ as many people within the military-industrial complex he created is having devastating effects on Russia's other business sectors. They simply can't survive. They're dealing with sky-high borrowing costs, profits are falling, and they aren't able to find the right people when they need them. Now, they're being forced to cut projects that would have led to investment in their own and Russia's future, all because Putin needs more people for his war. Natalia Milchakova, an analyst at Freedom Finance Global, discusses the future of Russia's economy. We can't rule out that in some sectors, unemployment might go up slightly. For example, if small and medium-sized enterprises leave the market or considerably cut expenditure because they cannot access finance due to high interest rates. These layoffs are going to affect Russia's white-collar workers ahead of their blue-collar employees. The latter will likely find plenty of work within the military-industrial complex Putin has created. As for the former, some may end up in military-related roles, whereas others could find themselves unable to find work because so many companies are cutting back. The Bell notes that some major Russian firms have already started making redundancies. Jobs have been cut by MTC, which is a leading mobile operator in Russia. Gazprom, which is one of Russia's largest energy companies, is also planning on slashing employees at its corporate headquarters. Ultimately, these cuts will only further hurt everyday Russians. The Bell cites numbers from Freedom Finance Global that find real wages in the country are expected to rise by between 3 and 4% in 2025. That doesn't amount to much when inflation is more than double that increase, effectively meaning that Russians are dealing with wage cuts. We also just mentioned the energy sector and Gazprom. Long the chief driver of Russia's economy, the country's energy sector is also starting to experience severe problems. In February 2024, Russian data show that oil production has slipped well below the nation's OPEC Plus quota. This quota is an agreed-upon limit on the amount of oil an OPEC member nation can produce per year. Russia's crude oil output fell to 8.962 million barrels per day, which is 16,000 barrels short of its supply agreement under OPEC Plus. Part of that reduction comes down to Russia promising to reduce its crude output by 971,000 barrels per day, as it was previously oversupplying. However, we also can't ignore the impact Ukraine has had on Russia's oil industry. Its campaign against Russia's oil refineries and pipelines has taken about 10% of Putin's oil industry offline, with more attacks against Russian oil looking likely as the war moves into 2025. Combine those attacks with Western sanctions starting to bite hard and Russia's commitment to reducing its output, and what do you get? An oil industry that employs fewer people and generates less income for Putin's war machine. Even Russia's weapons industry isn't immune from these types of shortfalls. Despite the fact that the country seems to be placing nearly all of its eggs in the weapons manufacturing basket, most of what's being produced is going to the soldiers fighting on the front lines in Ukraine. The problem is that Putin's invasion has showcased that many of his country's weapons are nowhere near as capable as he claimed. The Kiev Independent highlights the impact that this combination of poor weaponry and being forced to build for war rather than sales has on Russia. Since Putin invaded Ukraine in February 2022, Russia's arms exports have taken a dramatic 47% tumble. That's part of a wider decline that now sees Russia accounting for just 7.8% of the global weapons dealing market share. The drop is actually 64% when measured from 2020, with the number of countries buying weapons having fallen to 33 from a high of 47 in 2022. The Jamestown Foundation says the issue is even worse than that, claiming that the decline in weapon sales has accelerated since Putin began his war. By 2024, sales were 92% lower than those seen in 2021, meaning Russia is pulling in less than $1 billion per year from its weapons. For context, it made $14.6 billion in 2021, $8 billion in 2022, and $3 billion in 2023. Again, sanctions and the need to cover domestic weapons supply play into this decline. But Putin can't escape the simple fact that his war is costing his country billions of dollars per year. And it may be impossible for him to undo the damage at this point. Why? The sheer cost of Putin's supposed special military operation is adding up. Against the backdrop of high interest rates, rampant inflation, job losses, recruitment problems, and lower sales of some of Russia's most important products, Putin is wasting billions of dollars of Russian money to keep his ego-driven war going. Back in December 2024, it was estimated that Russia has spent over $200 billion on Putin's war, while absorbing around 700,000 casualties. Recruitment costs for the Russian military are also soaring, with one-time enlistment fees of $20,000 being paid out and Russian soldiers earning between $2,000 and $5,000 per month. That's good for the soldiers' bank accounts, but it's all money that Russia isn't investing into activities that aren't related to the war. We've already seen the impact that's having on its non-war businesses. During the first half of 2023, Russia was spending $13.42 billion per year on military salaries. That number has likely grown since then, which isn't ideal for a country that's losing its oil and weapons revenue while dealing with a host of domestic issues previously pointed out. Russia is also dealing with an estimated $340 billion of Russian central bank foreign currency reserves being frozen, according to Russia Matters. Its financial sector has absorbed hundreds of billions of dollars of losses caused by Western sanctions, with its earnings from energy exports dropping by $78.5 billion between December 2022 and June 2024. Again, it all amounts to less money coming in as Putin dedicates billions more to an invasion that was only supposed to last 5 days. And none of this accounts for what the future holds for Russia. According to a joint report by the World Bank, United Nations, and European Commission, it's believed that the cost of rebuilding Ukraine is around $486 billion. That's bad news for Putin, whether he wins or loses the war. If he wins, he has to plow money that Russia doesn't have into rebuilding a country that his military has devastated. If Russia loses, it may still be on the hook for at least some of those reconstruction costs if the West decides to punish Putin for his actions. In the immediate future, Russia is hurtling toward a recession in 2025. That's according to the Atlantic Council, which points to the weakening ruble, international sanctions, and the interest rate and inflation issues previously mentioned. Labour shortages mean that the industrial factories are operating at 81% capacity. Russian businesses that previously operated internationally are struggling under the weight of Western sanctions. And with Putin spending tens of billions of dollars every year on more weapons, none of these problems look like they're going to be solved anytime soon. It's gotten so bad for Russia that Reuters reports that its economy would struggle even if peace were achieved with Ukraine. The country's lending crisis would play a massive role here. Russia's military businesses aren't going to default on their loans, as they're primarily state-owned and the beneficiaries of Putin pumping 40% of Russia's federal government budget and 8% of its GDP into their coffers. But Russia's manufacturing businesses outside of the military, that's a different story. It's estimated that 20% of those companies spent at least 2/3 of their operating profits serving loan debt in 2024, compared to just 10% the year prior. That's unsustainable and is only going to lead to even more cost cutting. Putin has ultimately created a no-win situation for his economy. If the Ukraine war continues, the many economic problems plaguing Russia only grow worse. But even if the war ends, those problems are already so massive that it will take years for Russia to approach something that even resembles a recovery. But what do you think about Russia's pending economic collapse? Is there anything it can do to recover? And what this will mean for Russia as a global power once the Ukraine war ends? Let us know your thoughts in the comments, and remember to subscribe to The Military Show for the latest news about Russia and Ukraine. We strive to be an accurate, up-to-date source of news surrounding major conflicts, and we greatly appreciate your support.